Good morning. Yesterday we have seen how a candlestick is formed, how a single candlestick is formed, and what is the representation of supply and demand on a single candlestick, and how the wick indicates what is happened. I mean, who is having a domination, either it's supply side or the demand side, which depending on the domination depending on the domination of either sides, the candlestick is formed. Let's just say we have discussed this yesterday also that on a single candlestick, if there is a ample amount of supply, then there is a pressure from the above, and when there is a demand pressure, then we see that there was a wick from the downside. So here in this candle, we see that there was a tug of war happened between both parties, and at the end of the day, nobody has succeeded, and that is why we don't see any color in this candle. We see that there was where the price has opened, there itself the price has been closed. There was price movement up and down, but still there was a strong tug of war happened between supply and demand side, and that is the reason we have formed this candle. Today we will be seeing multiple candles and how we can analyze multiple candles. Here we can see that as we have known, a single candlestick, let's just say, is a ABCD of a charting. Then what we are going to do is we are going to form words with those candles. That means that we are going to see that single candle on a in combination with, let's just say, 5 to 6 candles. That is how we will determine the trend. If we get to see only 6 candles, then how will we determine which side is winning, either supply side is winning or demand side is winning. So that is how we will be understanding all these patterns. First, let's start with this candle, this pattern, and as we can see, there is a supply side coming up, and there is strong supply pressure in this pattern. And here we can see that there are 3 candles, and this candle significantly has a strong price movement, and which indicates that there is a domination on the supply side. And after that, what happened is there was a demand, and there was a demand pressure, and the demand pressure could not even break this single candle. And after 3 days also, let's just say these are daily candles, let's just assume that these are daily candles. What happened afterwards is, after 3 days also, these demand side could not overcome this supply side. These 3 candles could not overcome the supply. That means that this was again a supply side candle has come. So when we see these kind of patterns, that means that there is a ample amount of supply pressure in the market, and that indicates that the trend will continue. The trend will continue on the downside. That is what this pattern indicates. Similarly, we will see, let's just say we are seeing this candle. Here we see that there is a strong amount of demand coming up into the market. That is why we see a demand candle. And after 2 or 3 candles, we see a 4th candle, which the supply side has tried to push the price down, but yet the demand has said overcome the supply side and has formed a green candle, and this is also a bullish candle. So the overall pattern, it indicates the bullish side domination in the market, and that is what we see, that this also might be a trend continuation towards the upside. And similarly, we can see other candles also. Here we can see that there was a supply pressure in the market. That is why we formed 4 candles, and after that also there was a slightly smaller bearish candle, red candle, and there is no demand side domination here. There is no indication that there is any shift in the demand side, shift towards the demand side. That is why this also indicates a trend continuation. If we have, let's consider something like this. Here we see the supply side coming up, 3 candles, and after the supply side has exhibited its domination, we see there is a doji candle happened. What it indicates is the supply side domination has been stopped. I mean, this candle indicates that there was a supply side demand, supply side pressure, and this candle has stopped the supply side pressure, and it did not allow any other candle to form. This indicates that there might be a stagnation in the supply pressure, and afterwards we see that aptly there was a demand candle, green candle formed, which negates this supply pressure, and we see that there is a demand coming up into the market, and this might be a reversal pattern. This might show that the first thing we have to understand is there was a stagnation of a supply pressure, and after supply pressure has been stagnated, I mean roadblock, afterwards there was a demand pressure that also has a strong domination, and then we can see a reversal happening here. Similarly, we can see here that there was a demand pressure in the market, and afterwards there was a single red bearish candle, which also indicates that some people who might have taken positions, long positions from the demand side, might have booked their profit here. This single candle indicates that there is no confirm reversal signal. This is not a confirmed reversal signal. People who might have bought long positions here, they might have booked their profits here, and trend again continued. These four candles indicates that after a while, after a while we see that demand has come up again, and this might be a trend continuation. Similarly, here also the same situation. There was a supply pressure coming up, and this single green candle can also indicate that the supply pressure has been stopped. Supply pressure has been stopped, and there might be some profit booking from the selling side also. This single candle indicates that there was a selling pressure, and there might be some profit booking happen on the way, and again we see a red candle. So this also indicates a trend continuation. And so here we can see that this is a demand pressure coming up into the market. After a while, what happened is, after a while the demand pressure was not significant enough. Let's just say there was a strong demand, then the candle would have been a little longer. But here we see that there are small candles happening along the way. After 6 days of after 6 days of demand also, the price movement has not been significant. So we can say that there was not, since candle has formed a small body, that also indicates that there was not so strong demand pressure in the market. And after these 6 days, we see that there is a strong supply pressure coming up in this candle. So this might also be a possible reversal. We can wait for one more candle. If that candle happened to be a red candle, then we can say that after a while, then there might be a possible reversal in the market. So these kind of patterns, following what we are trying to say here is, in yesterday's class we have considered only single candles, but when we see that candle in combination with other candles, and we see the strength in the single candle, then we can understand the market much easier. If a market is not moving on an x-axis on a significant way, then that means that there is a stagnation happening, and we will wait for the candle. We will wait for the right candle to happen, and after the right candle comes up, we will see that there is a supply pressure in the market, and then we can take a selling trade in the market. So after that, okay, here we can see, here this is there was a supply pressure in the market, though this was not significant. Yes, there was a supply pressure, and this supply pressure was also stopped here with these three doji candles. We can say that the supply pressure has been stopped with stopped because of the demand pressure, and there was not even a single candle after this. That indicates that this trend, which is coming from above, which is on the supply side, has been stopped by the demand side, and there might possibly be a reversal. Similar thing happened here also. There was a demand pressure in these candles, and after that these three doji candles indicates that there was a significant pressure from the supply side, and this might also be a possible reversal. So what we are trying to understand here is, when we have not understanding a single candle, but when we see the single candle in combination with other candles, in combination of 5 to 10 candles, then they'll create a meaning out of it. Just like when we talk about a single word, single alphabet, we can't understand a meaning of a poem or a word, but when we keep the single alphabet in a word, then we'll create a meaning. Similar thing is happening here. When we understand a single candle, we can't determine which course of action it might be taken. But when we keep the single candle in a combination of other candles, then we can create a possible meaning, and depending on that, we can create our trades also. So other combinations we'll see. See here we can see that there was supply pressure, and supply pressure has been altered here a little bit, but again a red candle has happened. So there might be a possible trend continuation only here, because there was not significant demand pressure. Yes, there was a slightly significant demand pressure here. If we had to consider, we could have taken a trade here, but after this red candle, there are also possibly there might be a trend continuation itself. So if we had to take a trade, let's just say these are the patterns we got to see in the chart, and we have to take a trade. So we have to pick a trade. Let's just say this thing seems to be happening most of the days. So we see strong demand pressure, and demand pressure has been altered, stopped here with the supply side, and supply side has pushed the price. Though the demand has pushed the price till here, the supply side has come up, and supply pressure has pushed it all towards this. So in order to, if we had to take a trade here, what we would take is, we would take a selling trade here, we would keep our stop loss here, we would take a selling trade here, and if a green candle happen to happen, if a green candle might happen, because in a trade there is no certainty. We always have to cover our losses. We always have to use stop losses, because though we might be very sure of the pattern, sometimes the market will go against us. So in order to protect our capital, we will keep a stop loss everywhere. In every trade, we will definitely have to choose a stop loss. So in this pattern, if you have to choose a stop loss, we will take a selling trade here. We'll make an entry here, and we'll keep our stop loss above this wick. So if a green candle comes up, and if the trend continues, then we will be stopped here, so that our capital will not be of a, will not lose much of our capital. In trading, if you are doing 10 trades, then obviously the trade percentage, trade profitability percentage will be somewhere around 70. 3 trades out of 10 trades will definitely go bad. You cannot be 100% certain on all the trades. So in order to protect your capital, what you have to do is, we will have to keep a stop loss in every trade, and that is what we see here. We'll see an example on a live market also. We have been following Okay, so we have been following Tata Motors from 2 or 3 sessions. So as we have discussed yesterday, Tata Motors was at 732, and it has risen till 742 yesterday. On a yesterday session, it has gone till 742. But afterwards, due to global conditions, what happened is, there was a correction in S&P 500 yesterday, and that impact has been on our market also. So what we see today is, Tata Motors has started at let's just say 737, and it has fallen till 728. In almost 30 minutes of trading, we see that Tata Motors has corrected till 728. It doesn't mean that Tata Motors has lost its steam. Tata Motors has, its fundamentals has been shaken. This is clearly a trader's intent. That yesterday it went till 743. Today they might have booked their profits, or some traders might have seen the world global circumstances, and they might have chosen the selling side, supply side. So that is what we see clearly here. In this candle, we see that the price has opened here, and the price has been pushed down here. There was an ample amount of 5 to 6 rupees of trade happened in this candle, and after the candle, this is a 5-minute candle. This is not a 1 hour candle, because we are talking about taking live trades. We need to be more apt towards the trading space. So we are shifting our focus to a 5-minute candle, and here we have 5-minute candle, and in the 5-minute candle, we are seeing that continuously the supply side is dominating on the market. So if we have to take a trade in this market, then we obviously have to be on the selling side. If we get a right opportunity to sell, then we have to be on the selling side. But as As we know, yesterday also there was a stoppage of Tata Motor stock at 7:30. 7:30 was a bottom in the yesterday's market. We'll see that. As you can see here, there was a strong resistance, strong support in the market at 7:30, and the price is at 7:28 today. So we will also try to look for this kind of pattern where the supply side has been stopped. Right now, the domination is on the supply side. If the market has to flip, if the market has to turn and go above, go around, then we have to find some other kind of support in this today's chart. So otherwise, if the selling continues, then we have to be on the selling side. If we had to take a trade in this market, in this pattern, we definitely have to take a selling trade. But for selling trade also, since we have lost almost 10 rupees of price action on a chart, so we can't directly take a selling trade. We have to wait for it. We have to wait for the opportunity on the selling side also. But right now, since it has lost 10 rupees, what we can observe is if the chart makes any support structure, if the chart makes any support candle similar to what happened here. See, yesterday also same thing happened. The price sold off, but there was a support happened at 7:30 exactly. So at 7:31 the market has found its support. So in order to take a reversal trade in the Tata Motors today also, you have to wait for a support structure happening on a 5-minute time frame. So we'll be waiting for the right candles to happen, and we'll take a reversal trade, because on the longer time frame, Tata Motors is already on a bullish pattern. So since we know that we on a longer time frame, let's just say this is a weekly candle. So these in a weekly pattern, we see that Tata Motors has sought a support at 600 rupees, and it is again doing a U-turn, and it is going up. This is a longer time frame Tata Motors stock. So on a longer time frame, we see that market might go up. On a longer time frame, market is totally going up. So on a shorter time frame, if you on a shorter time frame, on a shorter time frame, if we had to take a trade, then we have to wait for the right signal. In order to get into the long trade also, if we had to, we know that on a weekly chart, we see that Tata Motors is going up. So wherever we get an opportunity to take a long trade, instead of selling trade, we will wait for the pattern to happen. We'll see that candlesticks, supporting candlesticks are forming in the market, and then we'll take a trade from here to a long side. So this is how we'll take it. Let's just say this. Let's just think that this is a possible bottom in the market. So in this market, where we are entering is, we are entering here. This is our entry point, and this is our stop loss point. We are stopping at 0.34 percentage, and almost we are, let's just say we are taking a reversal trade here. We are taking a reversal trade towards the upside, and this is the starting point of the trade, and this is the stop loss, and this is the target for today. So this is how we will determine where we can enter a trade, and we have to wait for some positive candles to happen. Then we can enter a long trade, because on the longer time frame, on the larger time frame, we have a bullish pattern happening in Tata Motors. So this is how candlesticks will be used in a real time market. So we have a strong supply. We have this supply has been countered here, but the supply has dominated again, formed strong selling candles. Now we will have to wait for a support happening in the market, and if we get 2 to 3 candles or 3 to 4 candles, let's just say for 20 minutes market has been stopped out here, we'll form a support pattern, and from support pattern we are taking a long trade, which indicates that this will be our risk in the trade, and this will be our profit. So this is how we are gonna analyze the market on a live market, and depending on the candlesticks and how larger time frames are playing a role, how shorter time frames are playing a role. Not only single, because as we discussed yesterday, time frame is of much importance, because on a larger time frame we see that Tata Motors is going up, but on a shorter time frame, on a today's time frame, we see that Tata Motors has sold off. So if you have to make a longer trade, if you have to take a long trade, then we have to wait for the market to make a support system, read candlesticks, analyze supply and demand side, and then take a trade. This is how it happens. So after that, till now we have seen that 5 to 6 candles will be considered, but these are much longer time frame candles. These things, these time frame patterns, these candlestick patterns happen on a daily candlesticks, and these are much longer. Let's just say these are like 50 to 100 candles. When combined together, then these patterns will be formed. So first we have understood candlesticks, and from candlesticks we saw the supply and demand pressure on a single candlestick, and today's class we have seen that when we combine the single candlestick in a, let's just say 5 to 10 combination of 5 to 10 candlesticks, what is the meaning that is coming up. And after 5 to 10 candlesticks, we are coming into the larger time frame candlesticks. So here these are few patterns that we most often will be able to see on a chart. So we'll starting with the ascending triangle. Ascending triangle means, let me be clear again. These patterns do not happen on a shorter time frame. These patterns do not happen on a 5 to 10 candlesticks. These happen almost for 50 to 100 candlesticks. When you are considering 50 to 100 days of trading, when you are considering a 50 to 100 days of candlestick pattern on a chart, then only consider these longer patterns. If you are considering these long patterns in a shorter time frame or in a daily trading, then these will not be much useful. Always consider this on a larger time frame. So what we see here is ascending triangle on a first here we see that ascending triangle. As we know, this is a demand side coming up. Demand has been countered by the supply, and again demand has pushed up, but again it has been countered. So what we see in these two things is there is a strong resistance happening here at a level. If we have to, we'll go into the real charts and see how this happens. But as of now, there is a demand side coming up, and again a selling pressure has come up, and but the selling pressure is not too strong that forms a trend. But it again demand side has come up, again selling side has come up. These kind of patterns happen because at this point of entry, at this point of price, there is a strong resistance level. So market keeps trying to push out of the out of the zone. See in this chart, demand has pushed the price till here, selling supply side has pushed it down, and again demand has pushed up, again supply is coming up. So similar to this, what happens is this is a daily chart, and in the daily chart the price resistance, there is a strong resistance at 1200. On a Bitcoin chart we are discussing, on a 1012, 1,12,000, there is strong resistance. So market is trying to push up here, but selling side, selling is happening. Again trying to push, again selling is happening. Again it will try to push and it will break off. That is what we see here. So this is a bullish continuation pattern. So this is happening on a live market on a Bitcoin chart. So market is trying to, demand is trying to push break a level. It is selling off. It is again trying, again it is selling off. Again it will break out of that 1,12,000 range, and it will make a strong exit. It will make a strong exit out of this range. So this is a bullish continuation pattern. Similarly, a descending triangle also happens. Same thing, reverse in reverse. Let's just say there is selling pressure, and selling pressure has been countered by the demand, but demand is not dominating enough. So again selling pressure comes up. Again demand is, so we see that demand is not able to break its previous level. In here, demand is not, let's just say this is also demand, but it is not so strong to break this level. So it is forming a descending triangle. That means that there will be a trend continuation like this. So similar thing we can see here also. This is not a triangle, but at the end of the day, demand is there, supply is trying to push, but supply is not exceeding much. Supply is not exceeding it is exceeding the previous level, but is not so strong that it will totally convert the bullish pattern into a downward trend. So it is correcting, but at the end of the day, it is breaking out. The demand is breaking out and taking to the new levels. So we can see the same thing here. It is a little, I mean, this is a downward word, this is a sideward word, this one is a triangle. But at the end of the day, what we can observe here is there is strong supply in these candles, and same thing happens here. There is a strong selling pressure. So market continues the trend. So apart from these two, bearish and bullish, and we can also see some other patterns here. These also are in these things, most important things are double tops and double bottoms. When we are seeing a double bottom, that means that market is trying to penetrate this level, but there is a support here. There is a support here, that's why demand has come up. Again, market has tried to penetrate here, but again support has come up and broke even this level. So in this kind of a pattern, we see that there is a reversal in the market, and we see that pattern is going up. Market is making a double bottom in this support level, and similarly same thing happens here also, that market is having a resistance level here. Market is trying to push it again and again, but it's not able to. So it's making a downward turn. So in these patterns, double top and double bottom, we see that this is a support and this is a resistance. When these things happen, we see that this is a bullish reversal and this is a bearish reversal. So we'll discuss further about on these patterns, on these bullish and bearish patterns. But as you go on, these are the these happen mostly on a longer time frames. These do not happen on a shorter time frame. Do not see these patterns in a 5 minutes or 10 minutes time frames. Always consider on a longer time frames of 1 day or else 1 week patterns. So these are few of longer time frame patterns. You go through all these things in your book, and we'll discuss them further. Thank you.